There you go.
Now we're talking.
Let me see if I can put my headphones on real quick. Man, you look good. I'm over here like in an Under Armour shirt. You over here looking good.
Ah, bro, normal, man. Little
I
polo. Under Armour's good too.
used to use that Under Armour all the time, man.
You got the whiteboard behind you, looking like Gary V over here.
It's actually because I've moved the office around, and behind me now though there's a mirror, so it looks kind of awkward.
Oh yeah, I can understand that.
You can actually see it like in this corner over here somewhere. I'm not looking at us right now, but
Yeah. How the showings go?
it was good. It's an investor, so he just wanted to see some properties that he can burr. That's what he's looking forward to do.
Nice.
Microphone. Why are you not connecting to my headphones, bro? So how's your day? How's everything?
It was good, man. Just putting out fires constantly,
Flyers?
Fires.
Fires?
Fuego, man, fuego.
Man, how is if there's an industry that excites me the most right now, it's financing. And it might have something to do with the fact that it's because I don't know anything in financing. Um, but you guys, a lot of people say find the deal and then the money comes up. They only say that after they have the resources to get the money.
Bro, I gotta say, financing is fun. I'm really passionate about it because every day it's different. It's like such a puzzle piece.
Mm.
There's so many things that go into it. Like definitely the debts is the most important part of it, the debt to income ratio. There's credit down payment and debt to income ratio.
Okay, so let's before we get a little deeper into it, let's start with who you are and how long you've been in business.
All right. So my name's Ron Mendez. I'm a mortgage loan originator. I've been doing it for about 6 months now.
And what company are you with?
Ready Mortgage Lenders.
And this is a question that I have. When after you pass your test to become a mortgage originator, what are some of the things you look for when you're looking to see what business you're going to work with? Is that and does that influence at all in the type of customers that you can help, the business that you go with, like the company you go with?
So not necessarily because everything is so work from home nowadays. Like no matter what business you go with, even if you're in Florida and your bank or your lender is based from Oklahoma, it's totally fine. You can work for any business that you want. I think really it's a referral based business. So even once I got my license, I was referred to this business from somebody who's actually on the board of executives,
Mm,
and he got me in easily, like without an interview or anything. Just get going.
wow. It's this whole world is just about who you know, dude.
It definitely is
It
the whole
helps a
real
lot,
estate game for sure.
especially real estate. Is real estate's crazy. We'll get
It
into some
is.
of the things.
Every transaction is different. Every mortgage is different. Every deal, no two deals are the same.
So I know you were preparing some things to talk about today. Do you want to get some of those started? We can dive in. I'm
Yeah, yeah,
excited. Look at
sure.
this. I have my little iPad to take my little notes. I'm ready.
Okay. All right. So yeah, I really do want to talk about debt to income ratio because that's the most important piece of the puzzle that a lot of people are frustrated with. They don't realize even if you make $100,000 a month, if your debts are $60,000 a month, you don't qualify for any mortgage. Not even that you have $40,000 a month of free money coming in and you can buy Lamborghinis. You don't qualify for even a $100 mortgage payment because your debt to income ratio is your mortgage payment plus any minimum monthly debts that you have. You add those two together and you divide by your gross income, monthly income.
Mm.
That's going to give you that percentage.
Can you repeat that?
So your mortgage payment plus your minimum monthly debt payments. And I mean like credit cards, car payments, and that's it. Just your minimum payments on the credit cards, not any utilities or phone bills, anything like that. So you
They don't
add
count
those
that
two,
for
they
the
don't
debt to
count.
cover.
No, they don't count that. So you just add those two together and you divide it by your gross monthly income. Then obviously you multiply that number by 100 and that gives you your percentage. So for conventional loans, you'll see online things that say like 36% is your maximum debt to income ratio. But that's why you can't believe everything you see online because really it's close to 50%. Technically, it's 49.99% as long as you have 5% down. If you put down 3%, we're going to have to keep it at 45% debt to income ratio. But basically, to keep it simple, if you make $10,000 a month, divide that in half, $5,000 is your maximum mortgage if you have no debt. If you have debt, let's say, for example, $500 car payment, $500 credit cards, $500 student loans. Now, from that 5,000, you subtract 1,500, and that's $3,500. That's your maximum mortgage payment,
Wow, that's a big difference.
right? I mean, that's still a nice house in this area. You'll still be flexing on everybody.
They flexing more than $500 in car though, so they can't buy the house.
Yeah, I mean, it's cool because in this business, you really have to be creative. Like, let's say you do have two car payments that are 500 each, but one of them is your wife's, and she drives it and she pays the monthly payments on it. Um, and all you did was co-sign on it. We could get that removed.
How's the kid and family?
Bro, everybody is good. I'm blessed. Everybody's healthy. Life is good, man.
What are some things that you like, Ron? Like, what are some interesting things that you like? No, it doesn't have to be interesting, but
Yeah, I mean, bro, I like playing chess, to be honest with you. A lot of times I'm playing the chess app on my phone.
hey, that's pretty cool.
Yeah, so sometimes I'll delete the app because I get addicted to it. I like working out. I used to be really big into bodybuilding, but not anymore. I just work out every day, at least do some burpees, push-ups, stuff like that every day in the morning,
Okay,
reading books, and just
what
spending.
was the last book you read?
I'm reading Rick Ross right now. He's got a new
Mhm.
book called oh, I sent it to you.
Yeah,
Perfect Day to Boss Up. It's a good book.
how's that one been?
That one's good. And then Think Like a Monk by Jay Shetty. That one's
I've
really
heard of
good.
that one.
Yeah, and the number one book I could recommend is 10% Happier. It's about meditation and
Wow.
like especially in the real estate world, bro. Like I don't know if this happens to you, but as soon as I wake up, my mind already starts thinking, "Dang, did I get this person's W-2? How do we do this?" And talking about loans, and I'm like, "All right, mind, I'm not the mind, so I'm gonna listen to you, and then I'm gonna let you go and relax it."
That sounds like a hell of a strategy. Have you heard of the app called Calm?
Yeah, I've heard of Calm and
I use
Headspace.
it.
I've used Headspace.
I use Calm every single day to go to sleep. I
Yeah.
do about 15 to 20 minutes of meditation every single day before going to sleep. I used to have to go smoke weed before going to sleep just to get me to go to sleep. Um, Throughout all of high school and everything, I'd be the type of person to like go to sleep at 2, 3 in the morning. It's just it wasn't embedded in me like to go to sleep early for whatever reason. And as I got older and moved out, then I kind of turned to weed to help me sleep at night, and it worked fantastic. And then meditation has helped a lot too. So now before I smoke, I do meditation. Sometimes I don't need to smoke, and it just
Yeah.
puts me right to sleep. There's
Yeah.
times where still the weed helps a little bit, But
Yeah. I mean, overthinking is just one of those things, man. It's not good.
and what were you doing before being a mortgage originator?
So selling phones at Verizon, slinging phones over at
Mm,
Cellular Sales Verizon, authorized retailer, and I still do it. I still do it. I don't limit myself. Multiple streams of
nice.
income.
Nice. So you're doing both. I didn't know you were doing both.
Yeah,
When
bro.
are you when are you finding the time to do the mortgage originator stuff? Because a lot goes into that.
Yeah, a lot does go into that. Luckily, with the Verizon, I make my own schedule pretty much. So, and they're just little 6-hour shifts.
Okay.
So, I'll make it happen. I make it happen. I don't limit myself. Even
Do you
if I
get
have
to
to
work
wake
from
up
home?
early. Work from home, everything from the mortgages is work from home or work on my phone, just calls, emails, and then my laptop or my computer at home. But the Verizon store, I just go in there and do a little 6-hour shift.
Okay. So it's you physically going to a store.
Hmm.
Okay. I think as a real estate agent, it's a little harder to have like a second part time or like a second job to where you would have two part times to say, because they don't have to be part times. But it makes it a little more complicated because of the showings and stuff, unless you're just not doing any of that.
I agree. Yeah, no,
Or
as
unless
a
you're injecting the
realtor,
customer to your time every time, which takes away from some of that customer service.
I think that's true. You definitely have to be out on the road, showing the houses and everything. So as a loan originator, I have a little bit more freedom, which is pretty cool.
I know a lot of real estate agents eventually turn into being like a loan
Yeah.
mortgage originator.
And vice versa. And like a lot of, I know some people who they'll do both. Like, don't even limit yourself there because, I could at least still have my realtor license too. And if it comes up
Yeah.
where some family member wants to buy a house, I can't do both, as in be their buyer agent and to get them the loan, just because whenever
Conflicts.
because a mortgage, what happens is when a mortgage is made and sold and funded, it gets sold to Freddie Mac or Fannie Mae, which is private companies that are government sponsored. These are government sponsored entities, Fannie Mae and Freddie Mac. And what they do is they provide liquidity to the market. They buy these mortgages so that banks and lenders can keep lending money. See what I'm
Mm.
saying?
Yep.
So then basically they package up all these mortgages into securities and they sell these mortgages packed as securities to investors like 401ks or sometimes private investors.
It kind of all kind of goes in a little circle, right? All the money.
Exactly.
And
And
then,
they won't buy a mortgage that had the same realtor and loan originator.
mm.
So that's why you can't do both in your transaction.
What eventually can you turn? So what's the difference between what you do and for example, what are the different roles within that mortgage side, within the financing side? Because I know that there's, for example, mortgage originator. There's also a
Processor, there's an underwriter.
I would love to know a little bit about underwriting at some point today, but you can talk about that whenever you're ready. But are those pretty much the people that are involved in financing?
So
A
as a
mortgage broker
mortgage,
would that be somebody that you're working for? Or who's a mortgage broker compared to then a mortgage originator? That's the word I was looking for earlier, mortgage broker.
gotcha. So I guess you would say kind of like you have a broker, like a brokerage, right? That
Mm-hmm.
would be my company, which is a direct lender, but can also work as a broker to find deals that they don't directly lend, such
Mm.
as non-QM loans, alternate products like the bank statement loans or the service coverage ratio loans that we were going to do for like investors. Um, then as a
So
mortgage loan originator, I am the guy who's bringing the business in. I'm going out and about and finding the loans. That's what I have to do and get them qualified. And then once I do my part of it, I send it to my baby. My babies are my processors. They are the best. Like once they get a hold of the file, I don't have to worry too much about it. My job is to go out there and get more leads at that point. Once it's been like everything signed, the initial disclosures, now the processors, they work on everything, like with the title companies. I help a lot, but I already collected the documents. I did my part. To really have
Right.
freedom in the business, you have to try to, all right, let your processors do what they have to do because they have a lot of work to do and they're paid to do it. So you just focus on bringing in the next loan.
Right. So that works. That's in a perfect world where the processors and stuff are doing their jobs, right? Is there cases where there's companies where the processors are just ass?
No, I mean, I don't know. My processors are great. Every processor I've worked with,
Okay.
communicate effectively through email, and then they'll call me too. Some of them will communicate directly to the borrower for me, which is cool, but they don't have to. They can just let me know, like, hey, we need this document, like an updated bank statement, let's say, from the borrower, and then I'll communicate to the borrower and let them know, like, hey, I need another pay stub from you, another bank statement, whatever it may be.
Okay. And then who comes after the processor? The underwriters?
So the processor gets everything ready and submits it to the underwriter. The underwriter is going to either say, okay, approved, clear to close, done deal, but usually no. Usually they will do a conditional approval, which means like everything looks good, but we need, anywhere from 4 to 15 more items, like a letter of explanation about, your marriage. Were you ever like in a different marriage, or a letter of explanation about, do you have access to this joint bank account 100%? And a letter of explanation doesn't have to be long. It can just be literally 2 sentences and signed by the borrower. So they'll come back with a conditional approval, updated things that we need before it can be clear to close.
They usually always come back with some type of conditional approval.
Yeah, usually. Absolutely.
Okay, so let's speak on in regards to the residential side, because I know we can get a little bit into like investing, because then they start changing a little bit. So what does a client? So I need to get it pre-approved. I want to buy a house. What are some of the things that I can do to where I can have, because essentially what people don't realize as well, in my personal opinion, is like, just because I'm working with you, sometimes not that they expect a lot out of you, but they're not all well prepared on some of the things that I need you to bring to the table so that we can this is a big process essentially for certain people. So what are some of the things that I can do to prepare to where I can have all my information ready to give over to you to make your job go smoother?
Okay. Do you mean as a realtor, or like
As a client?
As
As
a
a
client?
client, because as all I'm doing as a realtor is practically if it's just referring you, and then you're pretty much talking to that client directly. So
Right.
what I would like to know
And
is, if I'm going to refer you anyways, what can I tell the client to where I can go getting them prepared, just at the most basic level, like, hey, look, go doing this or go doing that, and make sure you
great.
reach out.
Absolutely. So what I wish every client knew is that your realtor is referring you to the lender, not because they're getting any kind of kickback or anything out of it. That's illegal for compliance issues. They're referring you to the lender because they know, like, and trust this lender to get the best job done for the client. They know that the communication is going to be there. They know that they're going to be great to work with. They've done business with them before. So
Right.
my thing would be, as a client, really, there's a list of documents that I'm gonna need, and I'm gonna take an application. First, I'm gonna pre-qualify them, um, and then I'm gonna take an application, and then I'm gonna send them a list of documents I need. But basically, it's like your ID, your social security, your last 2 bank statements, your last 2 pay stubs. We may or may not need your last 2 years of tax returns.
Explain that to me, why you may or may not need it.
Just because if you're self-employed, we're definitely going to need it. because we have to use the adjusted income, the net income. We can't go off just the 1099 or the gross income. We have to look at all the deductions. If you've been with your company for a long time as a W-2 employee, we may just use your last two W-2s and do it W-2 only. We may not need to look at your taxes.
Essentially, those are Freddie Mae's and Fannie Mac's favorite.
Yeah, those are the easiest, I'd say for sure. Is hourly and salary, they're really the easiest.
Okay. And then do you come across, I'm sure you come across a lot of people who is just like, yo, we cannot go based off of my taxes.
Yeah, all the time.
What do you have out there for those people?
So I completely get it. Self-employed, and you have a lot of legit deductions. You have a lot of business expenses. You have a really good CPA. That's great. That's great. There are alternative products for that are non-conventional. So there's a few of them. There's a bank statement only loan, which if you have 2 years of self-employment, we can take, let's say, 12 to 24 months of your bank statements from either your personal or your business account. There's going to be a 50% expense ratio. So half of that income is not going to be used to qualify. So there has to be some really good high income there, really. That's one way we could do it, or we can do it even with just last year's 1099. If you've been in business for over 2 years, we can do it with just last year's 1099, and we'll just use a 20% expense ratio. So that one's really good. Then of course there's
to be in business for more than 2 years to get that one.
Yep.
Okay.
And then there's like for investors who are just buying a rental property or refinancing a rental property, we can do where literally we look at no income. We just look at, is the income from that property going to be more than what the mortgage is going to be? So if the rent is, $4,000 or $5,000 a month, it's a duplex. The mortgage is going to be 25,000 or 2,500 a month. That's it.
And how are interest rates looking for that one?
They're not the best, but they're not the worst either. 4.3, I'd say, around there. There's hard money loans that are going to be 7, but and those they can make their own rules about everything.
Well, look how simple. And bro, you're talking about, look at this conversation. When I first started in this whole business, I got referred over to a hard money loan, and my buddy that referred me was like, yeah, bro, he's giving me money at 8%. Very first thing. So I was like, okay, that's not bad. I mean, I'm just starting 8% hard money loan. Okay, that's not bad. I wrote the guy, and the guy came at me with like 14%.
Yeah.
I said, hey, I need some money. He said, yeah, that's no problem. I can give it to you at 14%. And just a simple text message of, oh, damn, but my buddy said you were giving it to him at 8. So I was expecting it to come at 8. He said, oh, okay, I can do 8, no problem. Bro, you're talking about thousands and thousands and thousands of dollars. And you over here just over a text message, you're going to tell me just, okay, don't worry about it.
Wow. I mean, shoot, shout out to him, man. He's making bank sometimes.
That's insane. So is there any of these different types? And then what would you consider going into when people talk about like creative financing? What does that really mean to you or in the industry? I don't know how familiar you are with it. I'm asking you because you're in finances. So
yeah, I mean, there's certain things like let's say we have to add a non-occupying co-borrower. Let's say we need what some would call a co-signer. In the mortgage industry, we don't really use that term co-signer. We'll use a non-occupying co-borrower. So this person is not going to be living in the home, and you're going to bring them in not for credit purposes. You want them to have equal or better credit, but we are still going to use the credit of whoever has the lowest middle score. So if you're a 680 and they're a 780, the loan is still going to be priced from the 680. But the only reason we would bring in a non-occupying co-borrower would be to add income to the loan. So we would want somebody with high income and no debt or low debt to help with the debt to income ratio if they can't qualify on their own. Preferably qualify on your own, but if you need to, let's bring in a non-occupying co-borrower.
So could it be like is it like kind of like when you're getting a car where essentially a co-borrower helps you get this loan?
Absolutely. Just because of their income is what we're gonna use if you don't have enough income or if your debts are too high.
Can you bringing them in actually hurt you, or only if their credit score is lower? Is there any other way that they can hurt you?
If their credit score is lower, all right, it depends. Let's say you have a 680 and they have a 670. That's fine. Even though their credit score is lower, now you might get a little bit higher rate, but you were going to get no rate to begin with because you weren't going to qualify. So the only way that they would hurt you, or not really hurt you, but not even be worth bringing along, is let's say they make $3,000 a month, but their debts are $2,000 a month. We're not going to be able to use it anyway, so no point.
Okay, I see.
Because we are going to use their housing expense, because they probably have a mortgage, or even if they don't have a mortgage, they own their home outright, where they still pay taxes and insurance, credit cards, car payments. So we got to look at all that.
And when we're talking about conventional loans, from the investor side, people max out on those conventional loans real quick. Am I right? I've heard of people maxing out at like 8 to 10 loans, and you're completely maxed out when it comes to conventional.
I think right now 10 loans is the maximum with conventional loans. But it can change too. Guidelines can change a lot. I don't pretend to know it all, because even just for conventional loans, just Freddie Mac's selling guide is 2,227 pages. So that's just Freddie Mac's. There's Fannie Mae. There's FHA with, HUD, Housing Urban Development. So there's VA loans.
I'm still not super familiar what HUD is, to be honest.
It's just the Housing and Urban Development. So they take care of the FHA loans. Basically, they make those rules, and Fannie Mae and Freddie Mac make the conventional rules.
Okay. So essentially, that's how many categories of loans are there? So conventional, non-conventional, and FHA?
Yeah, there's conventional, there's FHA, there's VA, there's USDA, and then there's like non-conforming loans.
And what are non-conforming loans?
Those are the bank statement loans, the debt to service coverage ratio.
The non-conventional.
Mm-hmm.
Awesome.
Yep. Private investor loans, portfolio loans.
How familiarized? I want to ask you 2-3 more questions if you don't mind. How much do you recommend these like construction loans, or people that are HELOCing their house, putting a HELOC on their house? Where do these loans come into play?
HELOCs are great. Definitely, it's good to have a HELOC every once in a while. You can have one of those, and it's just like a credit card, but it's off the equity that you've built into your home from your.
Can you do that on Can you do that on a investing property?
You can.
Would you say that that's one of, if a person owns a few rental properties and he's looking to expand, what are some of the best loan types that you might recommend that person?
So if you own a couple of investment properties and you're looking to buy more investment properties?
Yeah, as an investor, you're just looking to keep growing. So you're trying to, I guess, max out your 10 conventional before you start getting into your non-conventionals. Even though you might have to play around and get some non-conventionals in order to later get a conventional, but
Yeah, I mean, you can do the cash out refinance for a down payment on another home. Um, but is this like once you've maxed out your 10 loans? Is that what you're saying?
No, so before your 10 loans, like you're trying to max out your 10 loans.
Okay. Then yeah, there's multiple different ways you could do it. Like the best way I could think of is really that debt to service coverage ratio loan that we were looking at, because it's easier to qualify for. You don't really, because it's kind of hard to qualify for that many loans. If we're gonna go conventional, you have to qualify for multiple mortgages with your income.
Okay, so it always obviously comes back to your income.
Yeah, like let's say you just have one primary residence and then you want to buy a second home. Well, you have to qualify for not only your primary home mortgage, but now also your second home mortgage, which is fine if you're making $10,000 a month, you could probably get away with it. But then you want to add a third one and a fourth one.
Yeah, I see.
For investment properties, I mean, you could do it because it depends on the down payment. If you're putting down 20%, you could probably do it, or 50%, you could definitely do it.
How does a person know? I've never understood how, for example, even if let's say I've always thought that people would get approved for something. Like I didn't think that this was just like a yes or no game. I thought that this would be like, hey, yeah, of course we can approve you, but you better look for like a $50,000 house because that's all we're going to approve you for example.
Yeah.
Compared to just like a no, you're not going to get pre-approved. Your everything numbers wise sucks.
Yeah, you're right. If it's over 50% debt to income ratio, they're not going to get approved for anything. If they're over 50% debt to income ratio, and this is conventional I'm talking about, I might have to tell them like, hey, if you pay off these credit cards, then you'd be approved for a $1,600 mortgage. But I know that's not really the price range that you were looking for. That might get you a $200,000 home. You want a $300,000 home. So if you pay off your car, or we go back to creative financing, if you refinance that car into somebody else's name and it completely falls off your credit report, then you qualify for the $300,000 home that you're looking for.
Okay, I see. And can you explain the difference? Because I've had customers ask me this question. It's the difference between like a cash out and a HELOC. So I know you said that a HELOC is more like a credit card to where a cash out, you're literally getting that money out. But essentially, if you're just reinvesting it into, like, let's say another property, like let's say somebody's doing a flip. I've seen a lot of people use HELOCs for flips. Are essentially HELOCs, is there closing costs and all those things involved in a HELOC as well?
There is, but on HELOCs, the good thing about it is that you're just paying it back kind of like a credit card. So kind of interest only for a few years as well. So it is a lot lesser payments.
And it's reusable too, right? Like if I pay down my HELOC to where I don't owe anything again, you can keep grabbing from there, or do you have to like reapply and do all these things?
Just keep it open. Yeah, it's fine.
So if I can literally apply for a HELOC, have it opened, and take from it as I need.
Yep, just a draw.
No way. And how long does it stay open for?
That's a good question. Draw period, 5 years maybe.
Draw period. It's a new word I just learned. Draw period.
I have to look into that, man.
That's a good. I'm glad I asked a good question.
That's what we got to do. Because HELOC on investment property, I'm like 99.9% sure, but you made me question that too when you asked me. So I'm going to look into that more just to double check. But that's what we were working on anyway. So I just never done one. So I'm going to double check that. And then draw period, what that is. Because, I know that there's also like an interest only period on a HELOC. And then the payment will have principal and interest after that. So I think really it just ranges. It can vary.
Debt freaks love interest only.
Yeah.
loans. They freaking love those. I mean, debt right
Bro.
now is cheaper than it's ever been in life. I was explaining to a buddy of mine today how when you're getting a 30-year of fixed, again, because if it's not a fixed interest rate, then I mean, who knows where you can end up. I don't know the rules there, but I know that when it's fixed, they can't touch your interest rate. So they're literally valuing today's money the same for the next 30 years, to where we've seen what a difference money can make in just the last year or two. And
Yeah.
think of a person that got a loan 3 years ago at what do you think interest rates were 3 years ago? They were still pretty low, like 2, 3 years ago, like right before
2, 3 years
COVID.
ago.
They were still like in the maybe high threes, mid to high threes.
They were a little bit higher, man.
Were
Three
they?
years ago. Yeah. I'd
Mm,
say 5%.
no way. Dang.
Like, yeah, like a lot of people refinanced last year. It
Wow.
was like the mortgage industry in 2020 had the best year ever from all the
So
refinances.
COVID, well, that's because a lot of people too are now like, yo, I got all this money in here. Let me take some out and go reinvest it in something.
Yeah, or a lot of people did have, loans that were 6, 7%, and they could refinance
Yeah,
and
that as well.
get it
That
down.
as well. Um, that's I so COVID essentially made our interest rates a little lower.
Bro, COVID made the interest rates the lowest, like record-breaking lows for
Mm,
interest rates. Because to stimulate the economy, the government needs people to be borrowing money
yeah.
to stimulate the economy. So that's why they essentially came out with cheap money.
I mean, they're printing this shit.
True. Bitcoin's on the tear right now.
Bro, I'm just waiting on my XRP to explode though.
I was freaking looking at XRP when it was like under a penny and shit, man. I
That's
did buy
crazy.
Dogecoin when it was under a penny, but I only put in $4 in 2019. But when it blew up, I had $1,200 in there. I sold it all
Wow.
in
Wow. For
$4, bro. If
four
I would have put in
dollars,
four
bro.
hundred,
A
would have made 100
thousand, just
grand.
leave it there.
Yep.
Wow.
Yeah, I was depressed for a little bit because I was like, damn, why didn't I put in more? But can't think like that.
Yeah. You have no control over that. I made a little bit of money with Dogecoin as well. Hopefully I
Nice.
can put that money into real estate now.
Yeah, honestly, I'm just buying Tesla and then I want to buy real estate. That's it.
I would, from a person that currently owns a Tesla, um, obviously there are two completely financially different goals. Like let's say a car and a house. If you can purchase the house before you buy the Tesla, and I know you know this because I know you're in finance, um, your later self will thank you. Like, yo, I'm glad
Yeah.
I bought the house before I got the Tesla.
But I gotta ask you, will you ever go back to another car that's not a Tesla?
Ah.
Is it like Apple? When you go to Apple, you stay with Apple?
I don't know because I've never driven anything else. So that's people have asked me that. Like I've said, dude, there's no other car that I can. There's nothing else that I absolutely recommend. My car cost me 56, let's say 55 something, 56. And they're currently giving me like 60 for it, 61. And the other day it was a conversation between me and my wife, like, hey, should we get rid of it and just use that $7,000 equity that we know it's usually never happens. You don't get equity in a car, and put it to just buying something else. And then we both just thought about it and we looked at each other and we were like, what the fuck would we buy? Like, there is no going back. There's just
Damn.
absolutely, there's no keys. Like just having to get used to
Yeah.
keys again would be like, damn, really? I got to carry this shit around. Um, that
It just
alone,
unlocks with your phone, right? Like your app.
yeah, you just pull up with your phone, make sure you have your Bluetooth on, and that's it. And the Bluetooth on, like, even if you have it off and you're outside of your car, you turn it on real quick, you'll see how it connects instantly. Like it's pretty weird how well the Bluetooth works.
Yeah, bro.
Um,
That's it. That's the future.
but what I tell people is, I don't know if what I'm recommending is Tesla as a company or if it's just the fact that it's my first electric vehicle and it's that transition of going to an electric vehicle or if it's Tesla. I haven't driven another electric vehicle to be able to say like, nah, all electric vehicles are fire. Um, So I can't really answer that question. But as far as like Tesla, I can't think of getting anything else right now. And even electric wise, I wouldn't think of getting anything else just because I feel like they're so far advanced.
And I look at the CEO as well. Like he was
100%.
highly involved with PayPal, sold that, made millions of dollars. Like everything he touches is just gold.
The guy, to me, the guy's an extremely depressed genius.
Yeah. And
It's the sad
he
part that he's like super depressed.
you know what's funny about it though is kind of this reminds me of what we were just talking about, like being a realtor and doing other things as well. Look at Elon Musk, he does Tesla and then he's got like two other companies as well.
SpaceX.
And Solar
SpaceX
City.
alone is fucking changing. Well, yeah, Solar City has to do a lot with Tesla though.
Yeah.
Tesla is more of like their solar brand. But he was also doing like that boring company, like
True.
fucking building underground tunnels in LA or something like that. Like, what are you doing, dude? I mean,
Yeah.
he's definitely not worried. He has more space to put those worries than we do. He's not thinking about tomorrow's dollar, and he might be, because those companies, I mean, dude, these are multi-billion-dollar companies.
Yeah. I mean, he talked
fact that
about
he
it
sold-
like when he went public, then he has to focus more on it, but he kind of recommends staying like as a private company for a while.
Yeah,
You
the
know?
fact that he sold every single real estate he owned was insane. He said,
True.
I don't want to own anything. He walks barefoot everywhere. He doesn't wear shoes anymore.
He's on another level, man. Like I can get there in my mind, but I need shoes. Yeah.
Yeah, I've talked to my wife about it. Life is really what you make it, bro. It truly,
Yeah.
truly, 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 absolutely is. Tony Robbins talks about it like just happiness in general. It's literally just a state of mind.
Yeah, we're here. Might as well live it up while we can.
I'm trying. That's one of the things I love about real estate. I'm trying to see how I can mix my regular life into real estate instead of having to like have two different types of lives, let's say.
Yeah, no, as long as stay yourself and you'll attract the right people. The people who don't come into it, they weren't meant to be anyway.
I've let go of a lot of people too. I'm always lately for like the last year, I've been trying to meet friends that literally like inspire me, bro. Instead of
Yeah.
just like another friends that like, yo, let's go to the club, or like I don't even know what examples to give because I don't really want to offend people,
Yeah.
but
No, it's
yeah.
true. I mean, it's great to go out and have fun too, but if you're doing it every weekend and or every other day, I don't get that part. But maybe it's because I'm married, have a kid.
That's
You
how
are
I feel
too,
sometimes.
to be a part of it.
That's how
But I
feel.
wouldn't have it any other way, honestly.
I
It's the
really
best.
wouldn't. Just mentally wise, the growth that I have felt mentally, I wouldn't
Yeah.
change it for absolutely anything. And there's nothing in that life that really pulls me back to it.
No,
Not that I was like a
especially when
partier before or anything, but
or when you have that great partner that just like pushes you to be better and supports you and everything, like everything, man. You think I make those posts on Instagram? Hell no. That's her. She's the creative
that's
one
your
on there.
wife.
Oh hell yeah.
My wife's the one taking the pictures and helping me with a lot of the stuff too. It's
Exactly,
that's the
bro.
other thing. Just trying to, as a family, see how we can all be involved together. To me,
Yeah.
that's huge. That's one of the things that I'm always looking at. So I like how photography fit into real estate as well, and seeing how
Hey,
we
let
can
me
work
ask you
together
as
that
a
way.
realtor, when you do showings, would you ever use, or I don't even know if this is a thing, like do realtors use like a staging company, like to come in and kind of like decorate the home or anything?
Yeah. So that happens. That depends on the listing agent, on the
The
person that
listing
listed
agent would
it.
do that.
They would be that would be coming out of their paycheck.
Got it.
So it really just depends on them seeing if the house needs it or not. You mostly see it a little more on like higher end houses. But now a lot of people are just doing like virtual staging. It honestly
True.
works just as fine. You just put like a fake couch and this and that, and it looks pretty good. But on the MLS, if you search on the MLS, it does have to say that it's like being staged. So you'll know, like, okay, the couch isn't actually there. So, but the pictures looks real legit.
Yeah.
At one point, it doesn't have to be today, because I don't expect it to. I don't expect us to be here for over an hour. But it would be great if next week maybe we can come back. I think one of the things that stops people from also, once they get approved, how often do people get approved and then not move forward?
It depends. I mean, it happens sometimes more than you think. Yeah.
I think we should do it for the people. We should maybe next week we can use my contract. We can use a contract that you have. We can make one up. We could, however you want to do it. It would be nice if maybe we could go over a contract just like a little bit in detail so that people know exactly what it is that they're signing, what it is that they should be looking for. Because not every mortgage originator out there has the best interest of the client, I would say.
Yeah, I mean, I'd say all like the interest rates, they all come from the same place, Freddie Mac and Fannie Mae. It's all the same.
They set the standard, right?
Absolutely. So then I like to give my clients, like, I'll even send them a picture of it or show them like, hey, these are the rates, and it's up to you. You can buy the rate down and get a lower rate, but are you going to be in that home for 10, 15 years? Are you just going to use it for 4 years while you're here for college and then sell it? Like, so
that's something I had never heard of before too, until I got into this game, was like buying down points. I was like, what the fuck you mean buying down points? What the hell am I buying down? And yeah, I never understood that till I got here. Yeah. Pretty much a point is just like the percentage, right? Like 2 points would be 2% of the loan, for example.
Kind of. But no, two, no, not even. Kinda. Because you might pay 1% of the loan amount, and it might actually only buy down that rate like 0.5 or 0.4 of a rate.
Okay, so do you mind explaining points a little bit then? Because that was obviously freaking.
Yeah. So let's say you're at 3.875, but if you pay $1,000 because your loan amount is $100,000, so you'll pay 1 point there. Then it'll get it down from 3.8 to 3.375. So that's about 0.4. That's how many points it just brought it down. Now you'd have to look at the payment monthly and see if it's worth it to you, to pay that extra $1,000. How much are you saving monthly? Because if you're only saving $30 a month, it's gonna take you 33 months to make that $1,000 back that you just spent on that point. But if you're gonna be there for a long time, then that's fine. It's up to you. So it's a personal preference. Rates are pretty low right now, so I don't typically recommend it anyway.
As an investor, would you just look at the total amount of interest that you're paying on the loan? Like, let's say you're a buy and hold person is buying a property and they know that they're going to hold it for the next 30 years. Is that something you recommend that they look at?
So they're just going to buy and hold it for 30 years. I mean, yeah.
Yeah. So if $1,000 costs you that 0.4%, you would have to see that 0.4% in the next 30 years if it's more than that $1,000, right?
Yeah. It definitely will be. So, but you could also just refinance in the future.
Okay. The thing with refinancing is a lot of money does go into these closing costs and things like that.
Yeah, that's true. You're going to have the title company. You're going to have an appraisal come out again. You're going to have taxes and insurance, recording again. So that is true. Maybe if you really are just going to keep it for 30 years and you want the best rate, look into buying down the point. If you know for a fact you're going to be in there for 30 years. The only problem is like nationwide, the average is about really 10 years that people keep their homes.
Wow.
Yeah.
I didn't know that.
I want to say
That's
it
good
could
to
even
know.
be
10
5
years.
years, but I'm just gonna say 10. But
Where do you
or it was
see
5 years, but now it's 10.
where do you see the future of housing going in your regular opinion? Like,
So to be honest, I think that they're probably eventually gonna have to do 40-year loans because prices keep going up. And for example, next year the conventional loan limit is going up, you know, to over
what does that mean?
600,000. So
What do you mean by
let's
a
say,
conventional loan limit?
okay, so conventional loans, they have limits. If your loan is over a certain amount, it's not a conventional loan. It will be called a jumbo loan. So right now, it's $548,250, 548,250. That's the conventional loan limit. If it's $1 over that, you're not going to qualify for a conventional loan. It's going to be a jumbo loan. And a jumbo loan has different requirements. They're going to have stricter credit score requirements, at least a 720. And the down payment's going to be at least 10%. Now, that conventional loan limit, that number is like the nationwide loan limit, but in areas where there's a high median income, it's going to be higher. Like, let's say in California, the conventional loan limit is a lot higher. So it depends. It varies on the area you're looking to buy.
Okay. And then anything above that would just be considered a jumbo loan.
Anything over that area's conventional loan limit will be a jumbo loan.
I learned that today.
I think I forgot to say that earlier when we were talking about what are all the different types of loans. Yeah, like a $1.5 million loan, you're not gonna buy a house that's $2 million and only put down 3 or 5%. They're gonna want to at least see 10%.
Okay.
There's so many things we could talk about. Like, why would you want to put down 20%? Like, that way you don't have mortgage insurance. There's all kinds of things we could go into.
You can talk about that because actually a lot of people don't know. We can, like you said, when we were texting, we can actually financing is, like you said, is something that we can honestly talk for a few days about, honestly.
Real.
And that's coming from two people that have only been in the industry for not a crazy amount, maybe through the cycle that we're going through now.
Yeah, we're still in our first year.
Yeah, there's people that have been in this shit for a long time if they've been through multiple cycles. So I think that's something too that we're just gonna have to learn as we go, is having to adjust to the new cycle. Because there's no way that the cycle is gonna last forever.
Always gotta be, just gotta be consistent, have patience and persistence. That's the main thing. Don't give up. What was really motivating to me the other day, man, at Verizon, I was working there selling some phones, and I was talking. Another reason why I keep that job too, even if I lower my hours down, bro, I meet people all the time. I meet realtors. I meet people who are looking to buy. I have my business cards there, and I met a business
Verizon.
Yeah, bro. Yeah. So I met a business owner and I asked him, like, was the first year tough? And he was like, what? The first 5 years were tough, struggling.
I bet.
But now he's been in it 10 years. He's got his cleaning service. I shouted him out on my Instagram, and cool guy, man. And it just gave me like some motivation. Like, don't give up.
They say you should. Yeah, there's no plan B after this, dude. I've decided that I'm not making any more plan Bs. This is it. This is plan A. You'll see me in the streets asking for $1, or you'll see me somewhere doing real good.
Oh yeah,
there's absolutely no plan Bs in this whatsoever. And yeah, as of now, we're going towards a better direction. We're not going towards the
I mean, there's gonna be days where you're gonna want to quit when something happens, but you're never really gonna quit. You're just gonna have those days. But
that's why your circle too is so important. I'm trying to. I don't need friends. I'm not trying to have friends. But we go back to that circle. It's true that every day you're not going to be on your shit, but it's nice when you're in a circle that those people, for example, I'm in a circle that if somebody doesn't do it, like another person does it. One person's always in charge of it, and it's just worked that way. And they just sound like a very motivational message, like just in the morning or something. And you can see how it helps people, especially the ones that day they were like, yo, I'm not going to do shit today. And then that message alone just completely like changed their mindset for the rest of the day. So who you surround yourself now more than ever, I do believe that tell me who you are around or something like that. You know how Hispanics have that saying, and I'll tell you who you are or something like that.
Yeah. No, it's true.
That is the most absolute truth that I've ever freaking heard in my life. And just something as simple too as one of the things that maybe you can do for yourself, I don't know if you're doing it, is whenever you're feeling stuck in something, try and ask yourself the question in a way you've never asked yourself that question before, like on the same topic, but just asking yourself the question like in a different way.
Yeah.
And I think you'll be able to give yourself a different response, and it might open a different door.
I always, instead of saying I can't, I always say, how can I?
How? Yes, sir.
You know?
Yes, sir. We should for sure get together some days, bro.
Yeah, I'm down,
See
bro.
what we can do. We can go out to eat. We can go out to do something.
Absolutely.
Not to be eat, but
Oh yeah, no, we can do. We'll do something soon for sure, man. Is this is your kid's first Halloween, huh?
yes.
Yeah.
Well, he was born October 9th, so technically it's his second.
Okay.
But
yeah,
this is
now
the
he's
first
gonna
one that
like
he'll
see everything.
Yeah, he's already walking, so we're gonna dress him up and we're gonna go out and walk something. That's one of the
awesome.
things that I'm trying to adjust a little bit though. Like I feel like I always have this contradiction with myself of like the more I work now, the less I have to work later. But then that also takes away time from being a dad, being a husband. So I'm trying to work on those times a little bit more than I have in the past.
It's tough, man. I'm the same way, and we're a little hard on ourselves, but you know, we'll find it. We'll get that balance. Like at some point, I do have to like I don't turn my phone off, but I put it on silent and ignore it.
My phone's automatically on do not disturb by 9 p.m. nowadays.
That's good.
I don't even want to like, damn, did I put my phone on do not disturb? At 9 p.m. my phone goes on do not disturb, and at 6 a.m. it comes back.
There we go.
So
that's what we got to do.
At some point when you first started in this mortgage industry, did you feel overwhelmed? Like, yo, this is a big ass industry, like, or did you kind of just?
I don't know if everybody feels this way, but at first I did feel like super overwhelmed, like as far as just being like, dang, I gotta get client. And then once you get your first client and you do it all, that's really when you learn everything. Because getting your license, you don't learn nothing. You just learn compliance, really. Same with realtors, yeah. So once you break the ice, you feel like a weight has been lifted off your shoulders. Like you feel like, okay, I can do this. That wasn't that hard, you know?
That's cool. That's cool that you went through that. Have you had really good mentors? Like, have you had any mentors help you out?
Yeah, for sure. I've got a lot of good mentors. I've got a guy who's been doing this 17 years. I got a guy who is a young man like me. I'm 25, he's 25, but he's been doing it for 3 years. So he's already good, and he's in the same company as me. So we talk a lot.
I was older than you.
Yeah, man. How old are you?
26 in July, just turned 26.
Yeah.
I thought you were older though. For some reason, I thought I met you through my brother or something like that. Now you got me messed up on when the heck did I meet you?
Man, we know each other a long time. We go way back, but it was back when I was hanging out in Tampa a lot. I live in St. Pete, but you know what's funny is I erased and deleted like all my social media for a while. I just opened it back up after getting the license because social media, if you don't use it the right way, it can just suck your whole time away. You're just scrolling through memes and stuff. So I got rid of it.
Yes. I deleted. What I actually did is just I followed a bunch of people and then started following a bunch of like motivational and just things that I feel would help.
Yeah, that's good.
Huh?
I need my laptop.
It's fine.
So next episode next week, you wanna pull out a contract, send it to me, and then do
We
you
can
mean like
honestly
the
go over
closing
mines if you
cost
want.
or?
Just everything. Like, for example, that thing that you sent me, our contract.
Yeah.
There's just a lot of people that, for example, they look at it and they see we're talking about a few $100,000 nowadays for any house. So people are looking on there, they're seeing numbers that they've never seen before, especially on their bank account. So that absolutely frightens the shit out of everybody. So I think that if people knew exactly what, not maybe exactly, because we're not gonna, people just whatever. If we tried to explain to people as much as possible what it is that they're signing, I think that they'll sign it with a lot more confidence, and that would help them out a lot.
Yeah, I think that what I've learned is for sure, like before just sending out the initial disclosures to people, because even you were a little bit surprised about all the closing costs, and I've had two other people kind of be super surprised about the closing costs. So I'm trying to get better at like, hey, you're gonna get an initial disclosure, and there's gonna be a lot of costs on there that are third-party fees. These are things that the lender cannot control, like taxes, insurance, the appraisal, the title fees. They're gonna charge whatever they want to charge, no matter which lender you go with. So, that's one thing. I think we should do a whole episode on what are exactly our closing costs.
I'd be more than happy with that. Anytime
Yeah.
you want to do one, I'm more than happy with that. If you want, we can plan a few of these for every Thursday until we have nothing else to talk about.
Bet.
We can also, if you're more than down, and it's a good way of networking, you can bring a guest one day, I can bring a guest next week. I'm more than fine if you want to keep doing some of these things together. I've always wanted to look for somebody who wanted to do these types of networking with me. Just
Yeah.
because one person alone kind of gets, there's only
I'm
so much we can talk
actually
about.
I'm super down. Every Thursday,
Perfect.
let's just hit each other up, man. Text, call me whenever, and whatever. Even if you just want to send me memes or whatever it is, let's hit
That'd
each
be
other up.
perfect. That
And
sounds
every
good. I don't send
Thursday,
memes though, to be honest.
nah, motivational quotes then.
Those would work.
Mhm.
Let me ask you a question. I have a lady who she's like, hey, this year I can't buy a house. I'm not ready. I told her that I can get her in touch with somebody. That what I told her is, hey, that's fine. This is actually the perfect time then to get in touch with a person who can maybe tell you what it is that you should be doing for the next year or 6 months or whatever it is. That way you can start preparing. Can I go ahead and send that person directly to you, or?
Yeah, I'll be available all day tomorrow. So you can either just give her my info, or if she feels comfortable and wants me to call her, I can do that. But the great thing about like you sending me somebody is that I keep it in my pipeline and I write down who the realtor is that sent it to me. So even if we don't do anything right now, and maybe you get busy and you forget about this person, I keep it in my pipeline. So I hit them up and I have written down who is that realtor.
Are you using any type of CRMs or anything like that?
I use what 35% of the mortgage industry uses, which is called Encompass. It's our loan origination software, also known as
Okay.
Ellie Mae. And it keeps a whole pipeline in there for us. It also lets us do an automated underwriting system. So once I put everything in the application and I verify everything with documentation, because you can't just take somebody's word about how much they make, you got to see the pay stubs, you got to see everything. Then I
Right.
can run the automatic underwriter and it'll instantly tell me if they're approved or not. And that's
Wow.
how a lender will give a pre-approval. That's the correct way to do it.
Okay. That's good to
So that's
know.
why it can take 24, 48 hours because it depends on the client. Did they send me their pay stubs and their bank statements and if they're taking forever, it's not
As a
my fault.
realtor, I don't just want to send anybody who I don't just want somebody to talk to me about real estate and uh just be like, hey, are you pre-approved? No, okay, here, go talk to Ron. Is there anything that I can do? I don't want to filter these people to the point where I might be like, dude, that's not part of your job to be filtering them like that. But is there any type of questions from the financing side that I should ask before sending them over to you?
I think it depends. I think realtors should definitely pre-qualify the clients if they can. And just ask them like, well, maybe how much money do you have saved up for this transaction? And also like, how's your credit score and how long have you been working in the same industry or at least or your same job? You
Okay.
know, we definitely need 2 years of the same type of income. So if they just quit their W-2 job and started their own business because their business is going to be great and they're going to make 3 times as much as they did in their job, that's awesome. That's great for them. But now we need 2 years of that self-employed income history. So they can't qualify for 2 years. That's a file that's DOA. That's dead on arrival right there. So there are
Dead
certain
on
things.
arrival.
Yeah.
First time I hear that one too, DOA. I like that
Yeah.
one.
I know, right?
DOA.
That's a
I've
DOA
used
file
that
right
one.
there. I'm not gonna, I don't want to say like I'm gonna waste my time because nobody's a waste of time, but I'll at least
Right.
give them information and keep them in the pipeline and talk to them in 2 years because
Right.
we're gonna
It's
be
just
in this
also knowing
business for a
how
long time.
to, of course, yeah. And it's just also, I didn't want to send you just anybody over there. Like, no, I'm getting unemployment. I want to, like,
Unemployment income can never be used
yeah.
to qualify.
So in those cases, so if somebody just kind of, I ask one of these questions and they don't qualify, should I just not even like, what should my response to these people be? Should I still put them in touch with you, or should I just be like, hey, look, maybe you should get those things figured out before going over there? Or because essentially that's
So
what you're going to tell them. I mean, like,
yeah, that it really is what I'm gonna tell them. I mean, I feel bad. I feel bad like running their credit and everything. So I definitely want to pre-qualify them first. So it's okay if you do a bit of a pre-qualification because I'm gonna pre-qualify them anyway before I take a full application and run their credit. Because if they don't have like they just started at Verizon, let's say it's a commission-based job. Before that, they were doing something else and it wasn't commission, it was just hourly. Well, commission is called like a variable income. It can fluctuate every month. So we're gonna need 2 years of history with this commission income to be able to use it. So if they just started 6 months ago and it's commission, then I'm not gonna run their credit and everything when I know they're not gonna qualify because the underwriter is just gonna say, hey, this is variable income. We need a 2-year history. Nothing else to talk about.
how important is it? Are your underwriters, they work for your company?
Yes, they're in-house underwriters.
Okay. That's cool.
Oh, and they're good people. Like, let's say they have a condition that they sent out, but and my processor, my processor is really cool. So she'll figure it out like, hey, we don't have, for example, the homeowner's insurance, we need an RCE, repair cost estimate. Like but we don't have that. The insurance company didn't send that, but they did send us another quote and something else in an email. Can we use this? And the underwriter is like, no, maybe they're, it's kind of like being in law, in like a court of law, where it's like, hey, this loan got approved using this, and this is why. And then we work with the underwriter, and it's like, okay, fine, that works.
I see. So the underwriters aren't always exactly right either, right?
Bro,
like sometimes they just don't have all the information. Let's put it that way.
Like I said, I don't pretend to know it all. We got to be humble because nobody knows it all. Just Freddie Mac's is 2,227 pages. I do read it for fun every day, but then there's like Fannie Mae's, and then there's like, so at least in this industry, if you don't know it all, because nobody does, at least you can be resourceful and find it and know where to find it and hit Control F on a keyboard,
Yeah, you can always that's one of my favorite sayings now that's actually helped my confidence a little bit. It's just like, hey, if I don't have that information, I'll get it for you. Like,
Yeah.
and it's being that honest with people too right away. Like, hey, look, that's a great question. If I don't have it, that's absolutely changed how I talk to people. Instead of just being like, oh fuck, like,
Yeah. No,
if they
people
ask me
can
something I
tell
don't know,
when people can tell
when
when
you're
you're BSing
bullshitting.
it. Yeah.
Yeah,
Like
100%.
like I said, HELOC on investment property. I got it written down right here. I'm 99.9% sure we can do it, but I'm gonna look into it and get back to you. And then about the
Alrighty,
drop period.
during this time as well. Yeah, let's discuss that because I still want to take some money out. I want to have some money in my bank account. So, to see kind of where the market moves. I don't want to wait for the market to move to then try and get the money. So that's something that we got to work on, that I got to work on myself, which is why I'm actually loving the fact that I'm able to co-host, let's say, co-host these meetings with you.
Yeah.
Perfect. We can talk about some of those things next week, and we can talk about closing costs as well. During the week, we can talk about what time, and maybe we can just pick a time. And if we're going to do it for a few weeks in a row, or however long you want to take this ride, maybe we can just try and shoot for almost the same time. That way we can just always plan around that.
Yeah.
That would work for me.
That works for me too.
But alrighty. And for now, where can they find you if they want to know more about you, if they want to write you?
Right now,
I know we've talked about it, but
Instagram, Ron Mendez _ mortgage lender. And my phone number is 727-278-8173. Hit me up.
awesome, my brother. Thank you so much. And I will be sending you, I'm actually going to call her as soon as we got off here and tell her that I was talking with my lender, and I'll send her over to you.
All right, bro. Sounds good.
All right, my brother. Have a good night.
You too, Sally. Bye.
All right, bro. Bye.